In today's volatile economy where stocks can crash overnight and cryptocurrencies swing wildly, one investment avenue stands the test of time: property. Hello, everyone, and welcome to this video on property investment, what you need to know. Whether you're a first-time buyer dreaming of your own home or an aspiring investor looking to build wealth, this guide is for you. Stick around, because by the end, you'll have the essentials to make informed decisions and potentially secure your financial future. Let's start with the basics. What exactly is property investment? At its core, it's purchasing real estate, land, or buildings with the goal of generating income or appreciating in value over time. This isn't just about flipping houses like on TV shows. It's a strategic move that can provide steady returns. There are several types to consider. Residential properties like single-family homes or apartments, which you can rent out for passive income. Commercial real estate, such as office spaces or retail stores, often yields higher rents but requires more capital. Then there's industrial property, like warehouses, booming with e-commerce growth. And don't forget land investment, where you buy undeveloped plots and wait for development opportunities. The key? Choose based on your risk tolerance, budget, and goals. Why invest in property now, especially in 2025? The market is massive and showing signs of acceleration. According to recent forecasts, the U.S. real estate market is projected to reach a staggering value of $136.62 trillion by the end of 2025. Existing home sales are expected to rise by 9%, and new home sales by 14%, driven by lower interest rates and increased inventory. That's exciting news for investors. Property offers unique advantages. Capital appreciation, where your asset grows in value. Historically, U.S. home prices have risen about 5% annually over the long term. Rental income provides a reliable cash flow, covering mortgages and generating profit. Tax benefits, like deductions for interest and depreciation, sweeten the deal. Plus, it's tangible. You can see and touch your investment, unlike abstract stocks. But hold on. It's not all smooth sailing. Property investment comes with risks you must understand. Markets can fluctuate. Remember the 2008 housing crash? In 2025, experts warn of shifts away from high-risk areas prone to climate events, like flood zones, pushing demand towards safer second-tier cities. Liquidity is low. You can't sell a house as quickly as a stock. Maintenance costs, tenant issues, and unexpected repairs can eat into profits. And financing? You'll likely need a mortgage, so factor in interest rates, which are improving but still require good credit. Always weigh these cons. Is real estate a good fit for your portfolio? For many, yes, but only if you're prepared. So how do you get started? First, educate yourself. Research local markets using tools like Zillow or Redfin to spot trends. Look for areas with job growth, good schools, and infrastructure development. In 2025, sustainability is key. Eco-friendly properties with green features are attracting premiums as buyers prioritize energy efficiency. Next, crunch the numbers. Calculate your budget, including down payments, typically 20% for investment properties and ongoing expenses. Explore financing options. Traditional mortgages, FHA loans for beginners, or even real estate investment trusts, REITs, if you want passive exposure without owning physical property. Build a team. A real estate agent, lawyer, and accountant can guide you through due diligence, like inspections and title searches. Start small, perhaps with a rental in your hometown, and scale up as you gain experience. Emerging trends for 2025 make this even more compelling. We're seeing a rebirth of office spaces post-pandemic, with demand for flexible hybrid work environments. Alternative properties, like data centers or self-storage, are gaining traction amid digital growth. And globally, the need for affordable housing is surging, creating opportunities in multifamily units. But remember, diversify. Don't put all your eggs in one basket. Combine property with other investments for balance. One final tip: avoid common pitfalls. Don't over-leverage with too much debt. Aim for properties that cash flow positively from day one. Stay patient. Real estate is a long-game play, not a get-rich-quick scheme. And always monitor economic indicators, like inflation or job reports, to time your moves. In conclusion, property investment can be a powerhouse for wealth building, offering stability in uncertain times. With the 2025 market poised for growth, now's the time to learn and act. If this video sparked your interest, subscribe and hit the bell for more investment insights. Drop a comment. What's your first step toward property investing? Thanks for watching, stay savvy, and I'll see you next time.